just rotate it clockwise, and then I'll have the number. Okay, I have the standalone number first. I think net profit of 6,300 crores is what we have. That I think should be the standalone number, right, Rima? Waiting for okay. This is standalone number. This is standalone number that we have at this point in time.
13,525 crores as far as the income is concerned, but these are the standalone numbers we'll by for the US GAAP numbers at this point. They should be out with you any minute now, and before that the market has opened as well, so we'll just come to the net profit is 6,306 crores, but that is the standalone number, so we'll wait by for what the consolidated numbers are in just a bit. The stock, of course, ahead of numbers is very excited, up almost about 0.7%, holding on to
gains. That's a big news. Big news. Rajiv Bansal has resigned as CFO of the company. I think that is a bigger news. Mr. Rajiv Bansal, Executive Vice President and Chief Financial Officer of Infosys, has informed the company's intention to resign. He'll be replaced by MD Ranganath, effective of business October 12, 2015. So starting today itself, that's a big breaking news. Let's put that out, guys. Rajiv Bansal has resigned as CFO of Infosys, and I think the market does not like that, because clearly a bit of
okay, 3,398 crores is the net profit, and that is better than what the street was estimating. We were expecting a profit of 3,244 crores. So straight off the bat, the first number that has come out from Infosys is better than street expectations. 3,398 crores compares to 3,030 crores previously, and this is a growth of almost 12% that we've got on the profitability for Infosys, and that's the reason why you're seeing the stock move on the upside as well. That is the one number that we have as far as net profits are concerned, 3,398 crores. So let's see whether this is a margin beat and what the top line number is. At this point in time,
15,635 crore is consolidated revenue versus a poll of 15,210 crores. So that's also a number which has beaten street estimate.
Okay, we've got the dollar revenue, and that's come in at 2,392. So that is significantly better than what the street was anticipating, guys. This is a very big beat. 2,392 is about 55 crore higher than what the street was anticipating.
Also, Reema, there's a big beat on the EBIT number. Just look at that, 3,993 crores EBIT number. That compares to 3,798, which was our own expectation. So 3,993 crores compares to about 3,447 last quarter. That's a 15% growth that we've seen in the EBIT number. Nilesh, I want to come to you quickly. The stock is spiking up now. Prima facie, all numbers look like they're better than street estimates. How would you react to it?
Yeah, I think these are fantastic set of numbers. There's growth, there is efficiency, there is margin expansion. So clearly, fundamentally, operationally, I think this is an excellent set of numbers, beats consensus, and I think the winning streak for Infosys continues for this quarter as well.
Okay, so quickly, just to rewind and recap the numbers for you. All numbers are a beat compared to consensus expectations by huge margins. Dollar revenue growth has come in at 6% on a quarter-on-quarter basis versus expectations of 3.6%. Margins have come in at 25.5%. That implies a growth of 150 basis points on a quarter-on-quarter basis. Again, beating street expectations. This in part is aided by the rupee depreciation, but that's a beat.
Rima,
and profits have gone up by 12%.
You told me 5% is aggressive, right, for dollar revenue. But this is Infosys for you. You know, when companies get into groove, and when for a company like Infosys, the big asset is really management, people, and you have finally someone really managing people well, and that's what's visible on the screen. But the key point here is that the stock opened 4.5% higher. It slipped off a bit now. It's facing some resistance at 1,200. So could this be a case of the blowout performance actually resulting in a bit of a top for the stock as well in the near term? That's one risk for the stock, and that's something that you got to keep an eye on through the day, because that will have an implication for the market as well.
Okay, I just want to point out the geographic growth, and it looks very good. If you look at North America, it grew by 6.1% sequentially this time. This compares to a 5.1% growth last quarter that we saw. Europe has been a blowout performance, 8.3% sequential growth in Europe compared to a 1.2% growth that we saw last quarter. India has grown by 9.4% compared to a decline of 6.2% that we saw last quarter, and the rest of the world as well has seen a growth of almost about 0.8%. So most geographic verticals have seen very good growth. The stock, by the way, is still up about 2.5%. Let's get one more comment in. Trip Chaudhary, the Managing Director, Equity Research at Global Equity Research, joins us now on the show. Trip, morning. It looks like a very good set of numbers from the company. The stock is up 2.5%. How would you react to it?
I think we have to be very careful about many things. I think, first of all, the execution was perfect. The current quarter, like August and September, were terrible for IT services. But we also have to keep an eye that the CFO has said that he's going to leave. And that is a problem because the CFO doesn't leave. The CFO leaves as we speak. So probably we need to be a little cognizant about what's happening at Infosys because management shift, especially when you have a beat, CFO leaves, it is an orange flag.
Okay, that's an important point. Nilesh, you want to comment on that? How worried would you be about the fact that the CFO has resigned? You know, Vishal Sikka took over in August 2014 when we were at the peak of the instability
Before that, some more news is on Infosys. So let's just report that. The guidance is out. That is more important. The FY guidance is 10 to 12% in constant currency terms and 6.4 to 8.4% in US dollar terms. So that's
so that would be lowered if it's actually in dollar terms. If it's at 6.4 to 8.4%, that would be lower compared to 7.2, 9.2 that they had indicated last quarter.
Yeah, so that's the guidance. That's the guidance for full year, and that could be one reason that the stock has now slipped quite a bit, along with the fact that the CFO has resigned. A quick word on guidance, personally.
I probably think that could also be the currency effect, given that now Infosys derives sizable revenues from Europe. Europe has been a kind of a growth engine for Infosys. So it's probably also got to do with the currency impact, given the dollar has been very strong and Infosys derives not necessarily 100% of its revenues from the US. I think it clearly seems to be the currency impact rather than any slowdown in the business momentum.
Okay, the stock has come off quite a bit,
Okay, let me run you through some more details. The dollar revenue growth of 6% that they've reported is the highest that we've seen in the last 16 quarters. In constant currency terms, the company has delivered a dollar revenue growth of 6.9%, and that is significantly better than what the street was anticipating. A third positive, the TCV, or the total contract value of new deal wins, stands at $983 million. This compares to $688 million in the prior quarter, so that's a jump of 40%.
So, Rima, let's do one thing actually. Let's focus on the two reasons why the stock is down, because it had all the ingredients in place to rally big, but from being 5% higher, the stock has gone down. And there are three reasons for that. One is, as Rima pointed out, the FY16 revenue guidance in dollar terms may actually have been cut. As Nilesh said, that could be because of the dollar factor, but that's one. The two is, I don't think they have given a Q3 revenue guidance. Normally they give the next quarter's.
They've stopped giving.
Okay, they've stopped giving that. Okay, and the second reason is the CFO resigning, and that also the attrition factor also going up. That's something that clearly is visible on these numbers, and the fact that the market went into these numbers with sky-high expectations, and even if the company has managed to beat that, still from the high point of the day, high point was 1210. And the stock is now trading at 1150. That was the risk for the market. And in fact, as we speak, the Nifty is also in danger of slipping into the red, just about 8 points higher for the Nifty now. And that's because Infosys stock has come off nearly 5% from the high point of the day. That was the risk reward not favoring you at higher levels.
So Nilesh, how worried would you be about the guidance bid? Because you said maybe it's to do with the currency adjustment. In constant currency, they've maintained it at 10 to 12%, but in dollar terms, they've cut it. Would that be a worry at all?
Well, if it's only to do with the currency and the strength of the dollar versus rest of the currencies globally, I don't think that would be a source of worry or a source of apprehension. Because all the other parameters in terms of deal wins and getting some of the larger customers and scaling them up, I think all those are positive. So the underlying business momentum continues to be very good. Some of the other geographies seem to have delivered stellar growth. I mean, markets like Europe, etc., have done extremely well for Infosys. So what it looks like, without even hearing yet what the management has to say, is that the underlying business momentum is strong. At this stage, I'd probably assume that the downward revision of the dollar guidance could purely be because of currency reasons, but we need to really hear the management in terms of what they have to say on this aspect.
What about the CFO resigning? How worried would you be about that?
So I think Rajiv has been an extraordinarily good professional. I think he's really been the face of Infosys in this whole phase of transition which they have had in an environment where they've had some changes at the CEO level. Rajiv actually has been the constant face to investors. See, Infosys also has been having a track record of having some exemplary CFOs, Mohandas Pai, Bala, Rajiv Bansal, and I think every time you have this set of anxiety that you know what's going to happen next. But I think these are just professionals who have left to kind of pursue other professional interests. So I think in the case of Rajiv, it would be interesting to know that is he just leaving to pursue other professional interests, or is it because you know there are any of the other factors responsible for that? But otherwise, yeah, I think it's a bit of a setback, but I don't think it's something which we need to be unduly worried about at this stage.
By the way, the volume growth has actually come in quite low. It stands at 3.7%. Whereas in the prior quarter it was at 5.4%. So despite the revenue growth looking so good, it's not backed by volume growth. Volume growth 3.7%, on-site volume growth 3.5%, while the offshore volume growth stands at 3.7%. So that is one internal. Apart from that, the client progression continues to be good. So they've added some clients in the $75 million as well as in the $50 million clients. 82 clients on the whole have been added, which compares with 79 clients. But as Anush was pointing out, attrition still remains sticky, 19.9 versus 19.2. Dipan, what do you think is the key reason why Infosys is not reacting to the beat that we've seen on the headline numbers? What could be the key reasons why the stock is down? Dipan?
So I think there are a few wrinkles and hopefully the management, there are a few wrinkles and hopefully the management will address them in their con call and the media interaction which they have. And as you mentioned, I think the volume growth, that is a bit disappointing, and on top of that to have this kind of top line growth, I think some amount of explanation needs to be there over there. Hopefully there are no extraordinary items above the line or below the line because that could dampen this stellar performance. But let's just wait and watch. I think there are many more positives in the result than negative, and maybe some amount of what the management has to say as far as the environment is concerned, and about the deal wins, and about how the strategy has played out in this quarter are the important aspects to look forward to.
Okay, by the way, the mid-cap index is in the red and the bank nifty is in the red. So the market also has a problem of its own. Apart from the Infosys, the Bank of Baroda stock is now down about 5%. And not just Infosys, even HCL Tech is down about 2%. And we have stocks like HDFC Bank and Wipro also falling about 0.5% to 1%. Nilesh, is there a risk of the stock having completed, as we were discussing earlier, having completed a near-term outperformance and now going through pause, maybe even correction, which would then be lapped up by institutional investors?
Absolutely, Anuj. Clearly looks to be that Infosys had gone into this set of earnings with a lot of outperformance, both relative as well as absolute outperformance.
10% gains.
Absolutely. I mean, these situations have really not happened too often in the past as far as Infosys is concerned in the last 2 or 3 years. So to that extent, I'd probably say that the market is perhaps going through that phenomena, the old market saying that you buy on expectations and sell on reality. Yes. I think that's exactly the case with Infosys right now. And I think post a correction, it should kind of consolidate. It should remain kind of a bit of range bound and look perhaps for the December quarter. The December quarter is going to be very, very important because then post the December quarter, the focus shifts from FY16 to FY17. And also it would indicate whether Infosys is on track to achieve its medium-term aspiration. So I think as far as this quarter is concerned, not very important in terms of the stock price. It makes a case for consolidation, a bit of correction, a range-bound movement. But I think post that, if the December quarter continues to be good or the noises are right, I think you would see Infosys coming back into a mode of outperformance.
Okay, by the way, the Nifty has now moved into the red as well, so it's given up all of its early morning gains, whatever it had. And not just Infosys, that's actually soured the mood in the entire IT space. HCL Tech, which had given a revenue warning, remember, that stock is also a big loser, down about 2%. And you have Wipro that's also trading in the red now marginally. And apart from that, it's banks. So not just Bank of Baroda, but PNB, HDFC Bank, SBI are all trading in the red at this point in time. Dipan, how do you approach the Infosys stock now? Because as you said, there may be more positives than negatives, but the point is that the stock has also seen a big reaction up until now in the last 3 months. So from a long-term investor's point of view, how would you approach the stock?
My sense is that this is an opportunity, this particular correction, and maybe there are some aspects which need some explanation, and there will be logical explanations for them as well. But I think it's an opportunity because the top line, bottom line numbers are extremely impressive. It could be the inorganic growth which is playing out, but on the whole, I think the numbers are impressive.
Sure.
And if the stock is correcting after that, I think it's an opportunity for investors to load up on the stock.
Okay, by the way, some more news, and I think that could be also an incremental reason that the stock is correcting. The board has approved a 2015 incentive plan. So there's an ESOP plan in place, and it could actually be about 2% of shares outstanding. So it could entail a maximum of 2% equity dilution. Could that also be a bit of a factor in today's performance of the stock?
Yeah, it's quite possible. I mean, of course, 2% ESOP is dilutive. So, in an environment where you're hardly growing earnings at 10-12%, that 2% ESOP plan knocks off about 20% of the incremental growth. So to that extent, in a way, it's definitely earnings dilutive. So one is that. Two is across what levels is this? I mean, could an ESOP plan like this could itself have triggered an attrition? Okay. There would always be some sort of the employee pool which would be unhappy. I mean, Infosys is a large company. It has a huge pool of employees, and if some of the employees do not necessarily like this, or they believe it's not been fair to them, that could have also triggered the attrition. We really don't know at this stage. It's probably kind of just speculating or trying to kind of take a call that this is not necessarily positive. But yes, I think it's definitely some kind of a sentiment dampener.
By the way, some more internals. The pricing has gone up after many quarters. So in reported terms, the total pricing has gone up by 2.5%, and both on-site as well as offshore pricing has gone up by a similar amount. 2.9 for on-site pricing, and offshore pricing has gone up by 2.3%. And that explains why, despite lower volume growth, the company has reported a 6% reported revenue growth. Because while volume growth is not looking that great at 3.7%, this time around they've managed to improve their pricing after, I think, 3 consecutive quarters of a decline.
I'll tell you one more thing. Again, if these numbers were delivered in last quarter, the stock would have been up 4%, not down 4%. It's because when you have to do an encore, you have to keep in mind that the stock has already rallied so much, and expectations this time was sky high. This is almost like a deja vu kind of scenario, just like when we had the last rate cut, not this rate cut, the last rate cut, the second March rate cut, when the market actually fell after hitting a high, and that could well be playing out with Infosys as well. The stock may well have hit a high of around 1210 for the near term. Even if these numbers are good for the stock to rally in the medium term and attract fresh investments, the stock should not collapse too much from here, because it will find buying at lower levels, because the numbers themselves are not too bad, but the fact that guidance has been lowered, the CFO has resigned, and the fact that the stock had rallied so much ahead of the numbers means that we're seeing this kind of performance.
Let's get Moshe Khatri into this conversation as well. He joins us now. He tracks the Infosys closely. Moshe, how would you react to these numbers? Because the pros and cons are equally stacked up, but the stock is down 4% after the company has lowered their FY16 revenue guidance. What would your reaction be?
So a couple of things. One, this is a multi-year journey, and I think this management team is doing, probably really focusing on all the important things that will transform Infosys during the next 2 to 3 years. The numbers are impressive. The metrics look good. Stock could be down 4% today, could be up 4% tomorrow. I would suggest looking at the long-term strategy that this management team is taking, and I think they're really hitting all the right cylinders in order for this company to get back to industry-like growth rates. So, as I said, one of your guests said that it's really difficult to do an encore every quarter. I think, again, the numbers look, from my perspective, very, very strong.
Okay. Moshe, typically when an old hand, resigns, there's always fear of a lot of flux or management restructuring, and that generally impacts business. How would you read Rajiv Bansal resigning as the CFO, and would that be a key reason for the stock to be under pressure today?
Look, every time a CFO resigns, typically that raises concerns over a lot of things, right? But I'm assuming some of it is also a function of the fact that there's a new CEO on board. And typically, that's not really a very surprising move. I mean, we see these things happen. Rajiv I thought, was a very, very strong CFO for Infosys. And I'm assuming this management team is going to be able to go out and, get somebody else on board that's going to be as strong, if not, I would say probably the same quality. But yeah, CFO leaving doesn't help. But I would suggest also to look at the numbers, the actual results and the metrics. And again, the multi-year plan seem to be working. That's the important thing.
Okay, by the way, the market is now at low point, 81.75 on the Nifty, and some more stocks which are now slipping into the red. Maruti, if you pull out the intraday chart of that one, that's lower quite a bit now. PNB is down about 1.5%. Bank of Baroda remains the top Nifty loser, but the last bit of pressure point for the market has come from Maruti. That stock has also started to correct quite a bit, actually. It's been a swift correction from 4,700 to 4,200. And just one more word on Infosys. It's been a dream day for Infosys' option sellers. The kind of high implied volatilities that existed, you've seen call premiums totally evaporate, and even put premiums have come down a bit despite the market falling, and that's because the IVs have fallen over there. So that's Infosys. But market overall now at 81.77. Nilesh, just a word on the market. It's finding resistance at these levels. Do you get a sense that this could be a counter trend move which could be getting over or could be getting tired, or would you bet on the market actually seeking higher levels as we move forward in the earnings season?
I think, Anuj, unlikely that it's going to move higher from these levels. I mean, I think from those lows of 75, 7600 that we saw a month back, versus that it's kind of gone to 8200. I think that's been a pretty good move, especially in a market environment, a global market environment, which has really not been very benign. So I think despite a poor global market environment, a poor global sentiment, I think India has done relatively well. It's been outperforming. A lot of that has also to do with the RBI rate cuts and things of that kind. It looks like that those events have played out in the very short term. It's unlikely that the current earnings season is going to be a very strong one which can really take the market and make it cross some of these levels of 8200 or so. So I probably think that in the short term, the rally seems to have played out. It's time for consolidation. It's time to take a look at the earnings, how they will play out. And then, of course, in November, we have the big event in terms of the Bihar elections. I think market will clearly have one eye on that as well. So I think there are a whole host of other reasons which we'll have to see. But I think in the interim, market could be in a good consolidation phase.
Moshe, after a 4.5% revenue growth in Q1, a 6% revenue growth in Q2 in dollar terms, what do you think Infosys will do for FY16 in terms of its dollar revenue growth? Will it beat its upper end of the guidance? Will it beat its guidance of 10 to 12%, considering how strong each one has been?
Yeah, the September quarter typically is a very strong quarter for the group, and then it's always a challenge to look at December and March, right? The second half is typically the slowest for the sector, but at this point it seems to be that they're at least on track to hit that 10 to 12% constant currency number guidance that they provided us with. It seems that they're on track to get to industry-like growth rates in fiscal year 2017. And again, the new CEO spoke about this last year, and it seems that he is executing on all these things that he kind of promised to do.
Okay, fair enough. Nilesh, how would you approach some of these other IT names now? TCS reports its numbers tomorrow. It's trading slightly soft. HCL Tech has already given its revenue warning. Given that, Infosys has scaled down its dollar revenue guidance, do you get a sense that even some of these other players could be under pressure this quarter?
I think so. I think it's by and large it's Infosys and TCS which normally set the trend for the industry. I mean, of course, it's been more so of TCS and a bit of support coming in from HCL Technologies. Clearly, of course, this time around HCL Technologies is unlikely to kind of deliver a very strong performance. So I think yes, overall the sector is going to be in some kind of a consolidation phase. The sector has done relatively well also on an aggregate basis. So to that extent, some bit of the outperformance could be shed also in the next few weeks. But our sense is that as we move towards kind of the month of December and early part of 2016, it's quite possible that the sector will regain its mode of outperformance, because then the focus shifts to FY17, and at least there is some visibility of growth. It may not be some very high or hyper growth, but there's some visibility of growth. So my sense is in the short term, the sector is likely to enter into consolidation, but I think 2 or 3 months down the line, I think it would, again, the sector would regain its momentum and get onto the path of outperformance.
Okay, so lots of numbers being thrown at you from Infosys. The stock is down close to about 3-odd%. Quickly to run you through the pros and cons of this earnings. Dollar revenue growth 6%, highest in the last 16 quarters. Constant currency growth at 6.9%. Margins have improved by 150 basis points, beating expectations. Profits are higher than expectations. Deal wins are strong at $983 million, telling you that the future perhaps is also looking bright. Pricing, after declining for the last 3 quarters, has bounced back and improved by 250 basis points, and the client progression or client mining continues to be on an upward trajectory or shows an improvement. Some of the reasons why the stock could be under pressure: A, it's seen a big rally from levels of 1,000 rupees prior to Q1. It rallied all the way to that 1,200 mark. It was sitting at fresh 52-week high, so some profit taking. CFO Rajiv Bansal has resigned, and he was an old hand. He helped in the transition from the old guard to the new guard, the change in strategy, and he's put in his papers, which is effective immediately. The dollar revenue has also been, dollar revenue guidance has been lowered from 7.2 to 9.2% to 6.4 to 8.4%, despite the constant currency growth being maintained, but the dollar revenue growth has been lowered. And attrition continues to remain sticky. In fact, it's gone up a tad bit on a quarter-on-quarter basis. And the company has announced an ESOP plan, which could be impacting, the financials to some extent, though it continues. That's investing in the company, so it typically tends to help in the long run. So these are how.
And of course, the stock went into the earnings this time,
yes,
10% higher over last 1 month compared to last earnings, when the stock went into the
From
earnings.
From last earnings to this earnings, it was a 20% rally that Infosys had put in.
So everything is good at a price, and the market actually expectations move accordingly.
All right. So let's pose this final question to Moshe before we let him go. Moshe, for an investor who has been invested into this stock for the long haul, should he be concerned about a lot of these cons that my colleague referred to, or should he look at the positive side and look at the glass half full with this extremely strong dollar revenue growth and perhaps stay invested into Infosys?
Yeah, we like, in these situations, when a company goes through a transformation, you have to look at earnings power. So, the numbers, for example, next year factor maybe a 10% earnings growth. If they do go back to somewhere in the mid double-digit growth rates, obviously the numbers look pretty conservative for next year. So from our perspective, you have to look at this stock from a long-term perspective. Beyond this quarter, if the stock is down 3%, again, look at the metrics, look at all the things, all these things that you're talking about, anywhere from the deal flow, the margins, pricing. It seems that they're executing on all these fronts to get this company back on track. And this is where you look at earnings power, and this is where you look at Infosys more as a long-term investment opportunity from our perspective.
All right, Moshe, we'll leave it at that. Thanks so much for joining us. So Infosys continues to be a long-term opportunity for most investors. But of course, there are a couple of reasons why the stock is under pressure today as well, as we just pointed out. Lowering of the dollar revenue guidance, the CFO stepping down, not boding well for the stock. But Nilesh, before we let you go, from a market's point of view, what is the big trigger to watch out for now? We have global cues, the Bihar elections, and now earnings has not gotten off on a great note. So what would be on your priority list?
So I think probably between now and December, I'd probably say that between now and February, I clearly think two big important events which have got nothing to do with earnings. One is, of course, the outcome of the Bihar elections. I mean, on one hand, you could just say it's like one state, going to the polls. But I think it has definitely a lot of symbolic implications. So I think one is that, and market could take a view based on the outcome of those elections, whether the reforms momentum will gather steam or not going forward. So one is that. And two is resolution to this whole DISCOM challenge which is there. I think clearly a solution on the DISCOM side, I think, could have far-reaching implications for the economy, for earnings, for market, over a 1 to 2 year horizon. I actually believe that over the next 12 to 18 months, a resolution to the DISCOM saga probably is even more important than even the rollout of the GST. And I think that's an important event that we need to look forward to.
All right, Nilesh, we'll leave it at that. Thanks so much for joining in. We leave right now. The markets are holding flat. Infosys sees profit taking down 3%. Along with that, Bank of Baroda is trading weak with a cut of about 4%. But a lot of private sector banks like IndusInd Bank, Kotak Mahindra Bank, and many commodity-linked names like Vedanta, Tata Steel, Hindalco are holding fort, which is what's keeping the Nifty largely flat. We'll slip into a very short break. When we return, the first phase of the Bihar election